Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, and in this weekly trade review, I'm going to show you an awesome setup that we found on Halliburton, which is part of the oil services ETF, and how we entered it with multiple time frame alignment and how we managed it. At Master Trader, we're technically based pattern traders. I say no setup, no pattern, no trade. Then we take that pattern and we look at the candlestick analysis. Where is that in connection with the overall trend, multiple time frames, support and resistance? Volume is a secondary plus. What are the broader market trends and bias doing? We use market internals for turns at when the markets get too fearful or too bullish. And then once we're in a trade, you just use proper position and money management. It's that simple. That's what trading's all about. So whenever I'm looking at a chart, which you're going to see in this video, you'll hear me talking about those different concepts because it's the sum total of them all, which is our approach when we come to a conclusion of whether something's a high probability setup or not, which you're going to see we had with Halliburton. This is the daily chart of Halliburton. Let's start here on the left. You can see here the moving averages. We use the 20, 50, and the 200. You can tell by they're all going flat. That by definition is telling me that we're in a tight sideways consolidation, and once you get some type of move up or down out of this, you should have a range expansion. We let the charts tell us which way they want to go. So they're all flat here. Right here on this particular bar, that was a bullish closing breakout relative to all these bars. You still had some resistance over here, but this was a beautiful long the next day over this bar's high. The concept, what we call absorbing supply, all of this bullish price action at the 20 and this close above the 50, that highly suggested it would barrel through this prior resistance over this bar's high. The next day we got a bullish gap breakout decisively above this multi-month consolidation. We bought, whether it was 5, 10, 15 minute high, whatever the case in the morning, stop prior day's low, and you'll see here in a moment on the weekly chart, the reason we called it a core long, which means holding period from weeks to month, is because it had the price void. Price void means you look to the left and there's insignificant congestion or resistance, which enables the stock to more easily move higher. This is bullet. We unfortunately didn't buy this gap because I guess I wasn't watching it at the time. But this is very bullish price action, which are red bars ignored, which is shallow retracements, consolidation over time as opposed to retracement. It got extended here. Look at the distance from the 20 MA. So now we're getting our pullback. This pullback actually had a gap down, and the prior highs are what we call minor support. So we had a gap down, little morning sell-off, you can see by the bottoming tail, held right at the rising 20 period moving average, and then it had what we call a gap reversal. So probably over 30-minute high is when we entered this as a core long. The sector was strong also, which I'll show you in a moment. I'll come back to the management in a moment, but let me show you the weekly chart now, which is where I said it was a core long. Now we entered the buy setup that I just showed you. That was a Master Trader buy setup with the gap reversal, and it was actually at the bottom of this bar. So compare the bottom of this weekly bar with the daily bar, and that's multiple time frame alignment. This was actually the initial breakout that I showed you on the daily chart in January, and it ended the week with what we call a wide range igniting bar from consolidation on the 20 MA on minor support. So that also suggested it would go through that. So again, that would have been a fantastic entry down there, but we entered on this buy setup. This would then be a red bar ignored, look to the left, and if you even look at a monthly chart, there was very little to the left. That's why we called it a core trade. And you can see here, we actually held on to this for 25 days, making 21% return. Beautiful trade there. Again, I'll come back to the management in a second. Another component that we look at that you saw on the slide one on the checklist of our concepts is your issue stock showing relative strength or weakness to the broader market? Are you trading with the sector strength? So regardless of what the broader markets were doing, oil's been the strongest sector this year. So we would trade this even without concern what the broader market was doing. This sector was on its own page, as we call it. So the oil services ETF, which Halliburton is part of, had the same similar gap reversal. But this one was actually a little weaker, and that's what we do when we call it drilling down. This is still a bullish sector, as you can see. So what we did on this day was we also looked at all the components of the OIH, trying to find the best of the sector. That's where we found Halliburton. So this supported the bullish trade. This is also bullish price action, but our Halliburton was better. So now let's go back to the management of Halliburton. So it had a nice robust 2-3 day move. So one thing we do as a risk management, when we still want to hold the underlying, we leg into a covered call. So what that means is we will sell an out of the money call option where we take in premium, which lowers our cost basis, and we're giving somebody the right to buy our merchandise on or before expiration at the strike price. You can see in the written text of this trade review the history of what we did of selling out of the money call spreads, and we did not want to give up our merchandise, so we were rolling the short call into expiration to the following week higher strike price call. And then here's the reason we got out of it. So this was a breakout failure, came in, had a bearish gap. It did recover, closing flat. It made another new high, but closed with a topping tail, lower low, lower high, lower low, lower high. So momentum is definitely slowed. It's still in an uptrend, rising 20, 50, 200. But we were short the calls into last Friday. And instead of rolling them, because it's getting a little bit more questionable of whether this is a short-term top, we said right here, let us get a sign, which means we did not roll the short call. Instead, at expiration, we said take our merchandise at the short strike price, and that locked in our gains. Sales price is a short strike price, less our lowered cost basis. Hope that helps. As always, email me, Dan@mastertrader.com. Good trading, and we'll see you in the next trade review.